We are joined now by David Dodge. He's the former Bank of Canada governor who served during the SARS epidemic and is now a senior advisor at the law firm Bennett Jones. David, thanks as always for your time.
Good to be here, John.
I guess I'll start with that call from RBC this morning. They're now looking for a contraction in the second quarter and the third quarter of this year, which kind of fits into the classic definition of a recession. Do you think we're going to see a recession here in Canada?
Look, I would be very surprised if the impact of this isn't to reduce output by as much as 3 or 4% over the course of the remainder of the next 12 months or so. I would be very surprised if the impact is a lot smaller than that. And so you can think of that as a classic recession, but there's a big hole that is being created for a period of time while this virus moves through the system.
What do you mean? Can you explain what that hole is?
Well, the hole, it comes in two parts. If you think of it in the service industries, seats that are not sold, performances that are not given are lost and gone for good. This is a real loss of real output that will not be regained in the future. On the good side, refrigerators, automobiles, and so on, things slow down. In part, they slowed down because they couldn't get parts and things out of China. So you have a period of time where output is down and cash flow is down. But at some point, exactly when, we don't really know, but at some point, maybe the end of this calendar year, we start to rebuild those stocks that were not bought. The refrigerators that would have been bought now and were not because they weren't available or whatever, they'll get bought later on. So that's the sort of hole on the good side that firms have to live through. On the service side, it's a worse proposition because a seat that's empty today cannot be resold a year from now.
Right. That is helpful context, and obviously we have seen central banks doing what they feel they can, especially over the last 24 hours here in North America, whether it's the U.S. Federal Reserve and their actions or Canada up in the ante with central bank cash and expanding the repo operations, boosting bond buybacks. Is throwing money into the system and doing these things, how effective can it be, David?
Yeah, the job of the central banks and the financial regulators is to, first of all, ensure the system remains liquid and remains functioning. And that's a key job that the central bank's there to do. In part, it does it through its lender of last resort function. In part, it does it just through its management of the markets, the operation of the repo market, and so on. So that's number one. The other problem and the sort of underlying problem is that credit begins to seize up. Your previous guest, I thought, gave a very good explanation of what happens there. So the credit seizes up, and in part then, the bank regulator, the prudential regulator, has to look at the rules as to whether banks can be permitted and should be permitted a little bit more room to take on risk, to take on lending. And similarly, on the bond market side, there's a real need for liquidity there, and that's the discount window, the repo market, becomes so important. So that is the really important role of central banks and financial authorities at this point in time. It's to keep the system moving, to try keep credit flowing,
yeah,
to bridge industries over this period where they won't have cash flow.
And then just to get back to the ultimate impact on the economy, since now we're going to be talking a lot about recessionary risk. If we think back to the financial crisis, not just whether you're in a recession, but the length of that recession, obviously we saw a longer, by definition, recession in the United States than in Canada. And also we have to look at the differences in provinces. I mean, we haven't even talked yet about the oil shock and what that means for Alberta's province. And of course, more recently than the economy here overall, we've seen a recession in Alberta. What do you think will really determine what the length of any recession in this country would ultimately be? Like, what's going to determine that?
Don't know. But if we take the sort of models of how a virus like this spreads and then tapers that my former colleagues at Johns Hopkins University have, I mean, that takes you through basically the remainder of this year, given what the medical folks think they know at this point in time about this particular virus. But that's the sort of normal pattern. So that's why I say I would be very surprised if there's not a real loss of output in this country in the order of about 3 or 4%, and maybe more. Let's take that as a number, over what would have been the standard output growth that we would have experienced of 1.6, 1.7%. So that certainly is a real hole, and it's a real loss. Canadians, in the sense, will have fewer goods and services because of what has happened. And the question then is, how does that get spread around? And for the financial authorities and for the central bank, it's how to minimize the additional disruption that comes from the perturbation of the financial markets per se. You would expect equities to take the hit. After all, that's what equity is all about, is to take the hit. The real problem is that we've got a number of our very important firms that have ended loading themselves up on debt, and so they will not be in a position to get through this trough. And in a sense, that's very much the job that now, in terms of the industrial side, the federal government has to worry about. Are they going to provide loan guarantees to these critical sectors to enable them to get through?
David,
these are the tough issues.
Yeah, we're almost out of time, and I appreciate all your insight. Just I've really got to try to squeeze in a couple things here. Should we prepare for more interest rate cuts as a result of what you're saying, number one? And number two, as you know, the Bank of Canada is going through a leadership transition right now. Do you think they should hold off on that?
No. I'm very confident that the bank is much more than the governor, and I can speak very strongly to that. The bank is very much more than that, and they should carry on. It's a strong institution. But going more to the point, yeah, I think they will lower rates a bit. But remember, if spreads on risky bonds are blowing out 4, 5, 6%, moving the overnight rate down another 1% to zero, it isn't going to offset a spread which blows out 4 or 5%. And so it's trying to ensure the credit markets keep functioning through this difficult period, and that is the real focus. It's not generalized stimulus. It's trying to deal with the specific problems that this coronavirus has caused in different industries and for different workers.
No doubt. So many moving parts. Great to get your analysis as always, David. We hope you'll come back and join us soon as we continue to watch this all unfold. David Dodge, former Bank of Canada governor. And
have a good day, John.
You too. And senior advisor with the law firm Bennett Jones.